Hello, and welcome to day 2 of the Crypto Connection 2021 conference series. My name is Gabriela Cruz, and I serve on the board of the Global Digital Asset and Cryptocurrency Association, or Global DCA for short. Based here in the US, we are a globally oriented self-regulatory association. We focus on 3 key areas: advocating for balanced regulation for the digital asset industry, raising awareness and enhancing education in the space, and setting principles-based standards to help steward our shared digital future. Our diverse and inclusive membership model touches all aspects of the digital asset ecosystem and welcomes individual entrepreneurs, small and medium enterprises, as well as large multinational corporations, all committed to our code of conduct and leading responsible innovation around the world. Together with our esteemed conference sponsors, the Global DCA is proud to partner with Tab Forum to present the Crypto Connection 2021 conference series. This year's conference draws together the industry's most distinguished thought leaders and C-suite executives to discuss the 5 pivotal dimensions necessary to position your firm as a leader in the era of institutional crypto adoption. These are emerging technologies, prime brokerage, legal and regulatory, credit and risk management, and compliance. Today's sessions are structured to dive further into the issue of trust in crypto, to explore the emerging area of crypto ETFs, and to showcase the jurisdiction of Bermuda with its focus on building a sound legal and regulatory environment for the industry. Our later sessions will highlight the importance of proper compliance and the challenges faced in this space, and will investigate the broader implications of DeFi, as well as the evolution of market surveillance products, exchanges, and crypto asset trading. As we have a full schedule today, I would just like to take a moment to thank all of our Global DCA members, conference sponsors, and amazing panelists, and we'll pass it over to my friend and colleague, Bruce Morris, CEO of Tab Group. Bruce?
Thanks, Gabby. And from everyone at Tab Forum and the Global DCA, welcome to Crypto Connection 2021, Day 2. 5 months ago, when I first met Matt Lyle, Gabby, and the team over at the Global DCA, I knew our partnership would produce a great event, but honestly didn't expect the results we're seeing for the event yesterday and today. Crypto Connection 2021 has attracted over 2,000 institutional digital asset professionals representing over 500 companies, all focused on one goal: how to make the digital asset markets drive investment performance while simultaneously providing a safe and compliant marketplace for all to participate. Special thanks to all our speakers and sponsors. We could not have done this without your participation and support. I hope everyone finds spending time at the event today of value. We realize there's a lot of competition out there for your attention. Make sure you stick around for our 1-hour networking session at the end of today from 5 to 6 Eastern Daylight Time. There's an easy access button on the main conference page. Hopefully you'll make some new connections here at the event too. So let's get started. Today's kickoff session is a critical topic for the market. I'm very excited to introduce Julian Sawyer, Bitstamp CEO, and Anna Irrera, Reuters Chief FinTech Correspondent, who are going to discuss trust in crypto. Anna, Julian, the stage is yours.
Hi, everyone. Thank you for joining us. Hi, Julian. How are you?
Very good, thank you.
So I'd like us to get started by asking you just to introduce yourself, but really just to give us a bit of background about yourself, sort of how you got into crypto.
My name is Julian Sawyer. I'm Chief Executive of Bitstamp Group, which is the oldest exchange in the world. My career was 20 years as a management consultant, and I kind of joke that I then did enough of PowerPoint and wanted to get a real job, and became co-founder and chief operating officer of Starling Bank, which is one of the challenger banks within the UK. And then I left that and then got into the world of crypto. So it's sort of moved from traditional financial services, challenger bank, fintechs, and then into the world of crypto.
So what drew you to crypto?
I think it's really the forefront of technology. And what's really, really exciting about what we're all doing is it's the fastest part of financial services. It's going to change quite a lot of how financial services is going to operate. And it's just an exciting time to be in this industry. So I think it was a no-brainer for me.
Did you have any concerns, or was there anything that you thought that, you needed to get some convincing on? Or, I'm just thinking of people who might be in your position now. Crypto's been hiring a lot, or has been hiring a lot over the past few months. So I wonder if there's someone, who had a career like yours and they're, were concerned about some things. And
I wouldn't say concerned. I think it's more excited, but I think you're right, Anna. There's been a lot of people who've moved from traditional financial services into the world of crypto. And I think that is a real indication of the maturity that we've got within this asset class and what we're doing. For me, I think, and I know we've got a title here today about trust, but I think it is around the compliance, risk, the control functions, which I think are super important. So for me to join Bitstamp, it was all about ensuring that we had got a business that was set up for success in the long term.
So what's kept you busy since joining?
Well, I joined in March this year, and as with everybody, we're all working from home. So it's been an amazing and challenging time in terms of meeting all of my team across the globe on Zoom. And I'm sure a lot of people understand what I mean by that. For me, it's about meeting the team, meeting the clients, understanding what our capabilities, understanding where we're going, our new products that we want to launch, and really just immersing myself within the business and the brand. And hopefully with travel starting to ease a little bit, it'll make it a little bit easier to go and to talk to the team. I think we are absolutely at a pivotal point in the crypto industry and financial services in terms of regulators, institutions, and consumers all starting to really engage with this asset class. So for me, and for what we're doing at Bitstamp, it is how we can pivot from a pure crypto exchange to a financial services business that is doing crypto. And I think that subtlety on that language is super important today.
So since the topic is trust, how have you seen trust within the space evolve since you joined, or even before you joined, or
I think
crypto?
I think trust means an awful lot of things. And I think as an industry, we do need to be talking more about that. So trust can be in terms of system security and resilience, about platform uptime. So when the market moves, as we've seen fairly recently, we want to make sure that the price is there, the right price for you to buy and sell your assets. But I think trust is also about the onboarding, the AML, the KYC, that compliance framework, the regulatory framework, and ensuring that customers understand that their assets are safe and secure. What I think is important, and I think we as an industry have to do this as an education, which is to inform consumers about what good looks like. What we do know is that as a AA rated exchange, we've got that capability in place. What we also recognize is there's a lot of trades, a lot of business that's being done on exchanges which are not as robust, as not as secure. And I think that becomes really important in terms of we've got to educate consumers and institutions in understanding what good looks like, what is a safe and secure, and therefore a trusted exchange.
And how can you do that as an exchange without, because obviously it's also your competitors, I guess. So how do you, if you're trying to educate but not sound like you're just dissing the competition, what's the balance, and how do you do that?
Yeah, I think there's two things. I think the industry as a whole needs to start ensuring that we have got that level of communication out. And there's obviously 4 or 5 exchanges which are rated to AA by Crypto Compare. I think we have a role to play. There's a number of exchanges that are A rated. They've got a role to play. And I think we've got to continue to use that as a way of informing, educating consumers and institutions on that piece. We also need to do that as well, just constantly talking about some of the things that perhaps aren't quite as exciting, but compliance, regulation, controls, and things like that, as well as from a system security, uptime, etc. Some of these topics don't really light a lot of fires for a lot of people, but they're absolutely critical. And I think what's important is if you look at this in the world of banking, we take that for granted. We take for granted that there's government guarantees, there's deposit schemes out there, there is that level of security and assurance for us to protect our money. And we need to do that and have that responsibility as well. So I don't have all the answers, but I do think as an industry, we need to be able to communicate and start to inform. And then as a business, Bitstamp is going to continue to do that.
So you guys are based in the UK, right? Which is not many exchanges are based in sort of offshore. Why is that important, you think, to be in the UK, and what kind of business does it attract?
So we're based in the UK, but our regulatory business is in Luxembourg in the European Union, and we're also within New York, and we're applying with the MAS in Singapore. So we want to go to the heartland of financial services. And it goes back to a comment I made slightly earlier, which is we're a financial services business doing crypto, and therefore we need to be in the heart of New York, Singapore, Luxembourg, UK, etc. That is super important. And we think institutions and institutional players are going to look and understand that they want that, that direction of travel, which is around the regulatory and the financial services centers. We employ a lot of people in a whole range of different offices around the world, but our core center of our financial services, our regulatory side, is in Luxembourg and New York and soon to be Singapore. So for me, to be there is where our clients are. To be there is where the regulators are there. To be there is where we get that assurance and that trust that I think is critically important.
So speaking of regulators, last week the FCA had an announcement, and they mentioned that sort of crypto firms weren't doing that great with AML in the UK. So what are your thoughts on that, and what effect does that have on trust, you think, and what can the industry do to improve?
Yeah, I think that was an interesting press release, what they did. So let me just give a very, very quick background. That was the implementation of the fifth money laundering directive that is being implemented across the European Union and in the UK. They had an application for that, which we're in the process as well. And I think, to be honest, the FCA probably had got, I think I've heard 200 applications. We know that is a huge number within a very short period of time. And let us not even think about how COVID has impacted the FCA and various other global regulators. So what they have said is the requirement is absolutely still there. You can continue to operate until your application has been completed, and they have extended that. What they also said, which I think is super interesting, is they've said something like 50 of those companies have withdrawn, which means they cannot trade cryptocurrencies in the UK. And I think that is important. While the UK is just one market out of many, many markets around the world, what is important is it goes back to that standard. What is that gold standard of regulation and compliance that you need to be operating at? And clearly those 50 companies went, this is too hard, too expensive, we're not good enough, we need to exit that market. And so I think what you'll see going forward is companies that aren't prepared to invest in compliance and all the other aspects of this, exiting some of the highly regulated markets, the United States, Europe, etc., and go to other markets. And I think that has only got to be good for consumers and for institutions, because that enables the protection that the regulators are going to offer. The fifth money laundering directive has been applied across the European Union. I think one of the challenges is that each market has done slightly different interpretation, and that is causing friction. We hope that while regulation is good, we do hope that we get to a common and consistent standard in that, because again, that is super important for consumers and institutions.
So there's a lot of talk these days in crypto about sort of more banking services being offered, or like more exchanges offering lending. What are your thoughts on that coming from with a banking background, and also just the fact that it gets called banking type services?
it is super interesting, and I think what you've got to do is unpack a whole range of different things here, and I'll try and do it very, very quickly. The first thing is, if we look at blockchain, that piece of technology is now being implemented and used across financial services, and I think that is really, really important. So the technology that these cryptocurrencies are using is now being used on central bank digital currencies and various other use cases around the world. So the technology is there. In terms of the use of that technology to offer banking services, I always go back to what was the problem we're trying to solve. And just to give you two very simple examples, when I go and buy my coffee on my Visa or MasterCard, it works. I know I'm going to get accepted anywhere in the world, and it works, and it's pretty much free, and it's instant. That's not a problem to solve. But when we look at things like remittance payments and cross-border payments, and we talk about supply chain finance, we're seeing some areas of financial services which is slow, which is very expensive. And that is really important. So I think what we're going to see is the use cases of the crypto assets and the digital assets being applied in a number of those areas. To go back to your direct question, if you then think about, well, what does banking mean? Banking means a safe and secure place for me to put my salary and my savings, a place which I can borrow money, and a place where I can earn some money. And clearly digital assets have a role in that. But I also have other institutions, banks, that is also offering that service. And while that may be newer technology, I think it's about those use cases. And I think that is the piece where probably me coming from financial services can see sort of both sides of the story, which I think is really interesting, which is, yes, there are some parts of financial services that are broken, that are very costly, that don't offer customer experience. And there's a great technology and solutions that are in crypto assets, and how do we put those things together? I don't think it's an or, it's an and between those two things.
What do you think consumers need to be more aware of in terms of risks when they come into this market that perhaps are overlooked or aren't as clear, and they get maybe, they're not that clear, especially during a bull market?
Yeah, I mean, I think we all have a duty to ensure that customers are informed and understand what these assets are and the volatility with them. What I think is interesting, and we're seeing some really good data at the moment from our customers. So a number of customers who are not buying Bitcoin, the conversations we always have is it's always about Bitcoin. And actually what we're seeing is there's a number of customers who aren't buying those, they're using other digital assets. And while some of those may have high volatility as well, there are other ones that are lower volatility. And so therefore, I think what we need to do is educate about the different use cases of why I want to use one asset over the other. Am I looking for this as an investment asset? Am I looking to trade? Am I looking at it to make payments, and therefore stablecoin comes in? I think we've got to continue to do this. And for us at Bitstamp, we have a series of assets, by no means the most assets of all the exchanges, but we do that for a reason, because we want to have the right assets, the ones that are liquid, the ones that are set up correctly, that are going to give you some level of stability. And that becomes really important, and not chase a fad or a hype around a particular coin or whatever, because that's where people are going to get hurt and burned, when they all jump in and follow a fad or hype, and it hasn't got any substance behind it.
What about institutional investors? What are the risks they should be aware of when they're choosing where to, if say they've decided to buy crypto, but what should they be aware of when they're deciding how to do it, where to do it? And do you feel like there's been more, like most of them are sort of educated on this now, or there's still a lot of education to happen on that side of the market too?
I think there's probably quite a lot of education required within the financial services industry on this new asset class. And I don't think that should come as a surprise to people. I think in terms of the risk, I guess I've got two things here. One is, who is your counterparty? Banks are very, very good at understanding counterparty risk. So who is the exchange you're going to work with? Who is the custodian? And am I going to be able to manage my assets and get the right price for what I'm trying to do? That becomes sort of, from a relationship and outsourcing, a counterparty risk perspective, banks are very, very good at that. They just need to go to the right players within that. What I think is important is the risks are no different. Sorry, the risks are different, but there are risks here. So if you move from one asset class to a crypto asset, there are risks, but they are different risks than what you have with that asset. And that's the part of education that we need to understand. So there are risks if you handle gold, or you handle oil, or if you handle Bitcoin. They're just different risks. And what we need to do as an industry is educate financial services to understand what those risks are. In other words, we need to help them ask the right questions. It doesn't mean the risks are any greater or less, but if they can ask the right questions, they'll get to the right answers and therefore be able to manage their risks.
So I don't want to talk about where price is going, but it's fallen now. Do you think that's dissuading institutions or not? Like there was a story, I guess, yesterday from Ruffer saying that they'd stepped out. I guess it was because of sort of the frenzy, not really the price drop. I'm not really sure. I don't remember, but I just saw that they had exited their investment, and it's quite quick, right? It seemed yesterday I wrote that they were making the investment. So
I think first of all, what we're seeing is a lot of institutional interest. Okay, again, in this asset class rather than one particular coin, or obviously Bitcoin being the dominant one. So we are seeing more and more interest within that. I think the conversation has moved from if we should do this to when and how. And that is the important shift. So previously, probably a year ago, we were talking and people going, oh, no, I'm not doing that. That's not for us. And now institutions at all levels and all types are going, yeah, that's kind of interesting. I want to know this. And some have made a step forward and some are not. I think there's a little bit of hype around the headlines. I think we know one or two personalities that are creating a bit of that hype. But underneath the covers, I don't know of any institution that is saying, we're not going to touch this, we're not talking about it, we're not looking at it, no way, over my dead body type approach. They're all looking at it, they're deciding about when they want to come into this market. And of course, some people are going to sell, some people are going to buy. And as you say, we don't particularly want to be on this conference today talking about what the price is going to happen. What we're seeing, though, is fundamentally different behavior than the last bull run. What we're seeing is institutions still buying, still being active, new institutions coming online, new institutions integrating into Bitstamp. And that, I think, is validation that the look and feel of this is different. And I think that's important. The last point I would make is that, what we now have got in the industry and in Bitstamp is a wider diversification of those digital assets. So it's not about Bitcoin. And I think we as an industry and probably the press and the conference circuits need to think about how we talk about other things apart from Bitcoin. I've tried to do that today, but I think we have to try and do that. And I think that is really important because there are other digital assets that are doing different behaviors, and that becomes important.
What about corporates? Do you see, obviously, big story this year? It reminded me when you mentioned big personalities, but do you see more coming in, or is it still quite early? Because there was a lot of talk about it, but in reality, it was, a handful, and they were because either their CEOs were quite into it, not really like just a general treasure holding Bitcoin, or other. Yeah,
I think what we're seeing is, yes, there's obviously some early adopters on the corporate space that is going in there and making a big noise, etc. And you would always have that with any technology that is coming on board. The point that I think is really interesting is some of the conversations that we're having with the CFOs of businesses, which is, what can I do with this technology? Is it a payments rail? Could I sell my products and receive a Bitcoin or something else with that? Should I have that on my balance sheet? Should I be paying my suppliers with that? Does this change any of my financial infrastructure that I need to have? Have I got the right banking relationships to enable me to do this in the future if I wish to do that? And you can see very quickly, can't you? If there's a car manufacturer, and I'm not going to mention any, that accepts Bitcoin, then does everybody? And all of a sudden, you can imagine there will be other manufacturers going, well, we have to do it. And you will get that snowball effect in particular sectors. And I think it does go back to, all the financial products that a CFO has got, from receiving money from their customers to working out what they do with their balance sheet and what do they do to pay their suppliers. Those are the conversations we're having, and I suspect it's a matter of when rather than if. And I think we're moving from that to, okay, we may need to sell our products using digital currencies. We may need to hold, or we may get them. So we may need to hold these assets. What are we going to do, and how do we do that? That, I think, is where it becomes really exciting as the industry is maturing into that mainstream corporate world.
Do you think, you mentioned payment rails and sort of practical utility rather than just the investment side. So let's focus on that a little bit. But in your conversations with corporates, do you think many of them are focused sort of on the advent perhaps of central bank digital currencies, and so they want to prepare by accepting, or do they actually see the likelihood of more customers wanting to pay with crypto, right? Because for many years we've seen we've seen crypto become more of an investable asset and an asset class in itself, but less signs that it's an actual form of payment. And you mentioned a big car manufacturer. They said yes, and then they said no. It was the environment. Was it the environment? Was no one paying with it? It's hard to know. But there were, during the previous bull runs, companies that started accepting it and then they stopped or no one used them. So.
Yeah, and I think what you've got to do here is unpack a little bit of this, if I may, which is Bitcoin the right product to buy a car, a TV, my shopping? Probably not, okay? Because if I want to buy something or sell something, I want assurance on the price and therefore the value. But we have other digital assets that are stable. We call them stable coins. So why don't we use those for payments? Does that help? So I think there's a tendency for us all to think, oh, it's only Bitcoin, and Bitcoin's volatile, so therefore what happens? And therefore, why do I want to get paid on that? Actually, we have a whole range of digital assets that are for different use cases. And so therefore, if I am wanting to make some payments, cross-border, remittance payments, supply chain finance, etc., then having that on stablecoin, which is very cheap and also very quick, will beat the infrastructure of SWIFT and SWIFT GPI and things like that. That, I think, is where it is interesting. So I think there is people who have a few headline-grabbing moments, and yes, great. But actually, the reality of this is that if I'm going to go and make a purchase, I'm going to do that as an individual, as a corporate. I'm going to do that on something which is stable, because that's the only way that I can actually make that transaction and buy the purchases or goods that I'm trying to buy or sell. And so I think what we've got to do is to break the problem down, this technology down, into a number of constituent parts, of which one of them is a more of a stable type asset, which I can then do payments on, as well as an investment type one, or one with an appreciating asset. And I think we're in danger of putting them all in together, and then we stop. And I think that becomes super interesting for us to differentiate those two things.
So we have one more minute, but I'm going to ask you one last question. I guess, what is perhaps a nightmare scenario for trust in crypto? Do you think it's likely we could see another giant exchange collapse like we saw in 2013? Are we over that? Or a giant hack, or a giant hack using crypto as ransomware, like for ransomware payments? Like what is the thing that keeps you up at night?
I think it is about failure of the top exchanges. Okay. Now that can be a whole range of things. It can be, system security. It could be a regulatory clampdown if an exchange isn't as very robust as the top exchanges. And I think that will erode some of that trust. And so what we hope as an industry, and I've said this a few times now, because I think this is so important as an industry rather than just Bitstamp, we need to ensure that we have got the very best. We are looking at ensuring that we can understand the risks around system security, the risks around regulation, etc. And what we've seen is, even when the regulators start looking at particular things, what's happened with Ripple in the US as an example, that knocks a lot of confidence. And what we need to ensure is that we have got that confidence. And so those are the things that I want to ensure, that as a leading exchange, we are providing that infrastructure and that business that is stable and strong.
All right, we've run out of time. So thank you so much, Julian, for your time and your answers.
Thank you.
Right.